Back on Yarbrough, good morning. News Talk 98.7. Stock market was up about 300 points yesterday. The Dow was. It's up about 350 as of this moment. This, though, after a 1,000-point drop on Monday. So, was the big drop a blip on the radar or something much bigger? Jim Brogan with Brogan Financial joins us on Yarbrough. Jim, good morning, sir. Is that a fair question? Blip on the radar or sign of something bigger?
That's a great question, actually, Bob. Thank you for having me on. The answer probably lies in the middle. I don't think it's nothing, but at the same point, I do think the reaction on Monday was a complete overreaction. We can talk a little bit about why, but and you're seeing that the last 2 days with, heck, the Dow's almost back over 40,000 already. Now, is there maybe a recession coming? Could be. Is the market concerned that instead of having a soft landing, we're going to have a harder landing? Yes, the market is concerned about that. However, I do think some of that is overreaction due to what we saw Friday and Monday.
So how do you brace for a recession if one is, in fact, on the way?
Do you mean as an investor or as a worker?
I would go, let's touch on both of those, because I know we've got a lot of investors who are listening, and then we got a lot of folks who may not have money in the market that this is still going to impact, so maybe a little of each.
So for an investor perspective, we don't really want to try to time recessions. We do want to look for opportunities. But, usually, we have to be 6 months in to a recession before we know we're in a recession, right? Because they look back at the prior 6 months. So usually by the time we know we're in recession, the market has already recovered because, remember, the stock market is a forward-looking thing. It's looking forward 8 to 9 months typically. Where are we going to be? Right now it might be looking at where are we going to be in the spring, early spring. So it's forward-looking. So we have to be very careful because the bottom for the stock market relative recession usually is very early on, sometimes even prior to us even knowing there's a recession. So I think don't rush out and panic and do something crazy, like sell and go to cash or put all your money in or pull all your money out of CDs and put it in stocks. Don't do anything drastic. Now, from a worker perspective, this is where your basic financial planning becomes more and more critically important, that you establish an emergency fund. You typically want to have at least 6 months of expenses saved so that if you were to get laid off or if inflation were to hit you particularly hard, you've got a buffer there. So it just underscores, and if somebody hasn't done that, it's never too late to start. Now, the other thing, Bob, I'll say is living here at East Tennessee, we don't see the effects of recession like other places in the country. That doesn't mean we wouldn't see some slowdown here, but usually it doesn't impact us as much.
Yeah. So what types of things, in addition to the stock market, are you keeping an eye on to indicate recession or not?
Well, economic data and unemployment. So, what kind of spurred this originally last week was the unemployment data. We bumped up to 4.3%. We've been under 4% for a long time, and I've maintained that I don't see the Feds cutting rates if unemployment's under 4%. But now it's at 4.3%. And there was some slowing in economic numbers. So the market kind of, in my view, overreacted somewhat to that news. I do want to mention, Bob, something nobody's talking about. On Monday, there's some expressions, selling begets selling, volatility begets volatility, and we kind of got in a spiral. A lot of that, Bob, was triggered by traders that were playing with exchange and interest rates between the Bank of Japan and the United States. And they were using money to buy either treasuries or the Magnificent Seven stocks. And when things started to go south, there was some panic selling. And again, volatility causes more volatility. So, I think being in an election season, the media and the politics of the moment are going to play this into the economy is failing. Whichever side of the aisle it is, they're going to blow this up and try to blame the other side. The reality is probably somewhere in the middle.
You mentioned foreign, this is kind of a worldwide thing on Monday. How, if at all, do foreign currencies affect the U.S. dollars like the recent drop of the yen in Japan?
Well, see, what happened is the Bank of Japan has always been very consistent in keeping rates at about zero. And so what traders do is they borrow money from the Bank of Japan by buying a bond, and they convert it to the U.S. and buy treasuries, but in some cases they take that money and they buy Magnificent Seven stocks. And, in the last few weeks, Bob, those stocks are down 25%, the Magnificent Seven. NVIDIA, Microsoft, Apple, they've really gotten hit hard. Well, then on July 31st, the Bank of Japan announced an interest rate increase. It was completely unexpected. And a lot of these traders leverage those positions, meaning if something goes down 10%, their holding goes down 20 or 30%. So it just kind of led to some panic selling to get out of that. You'd think we'd learn our lessons from things like that with what we went through with the mortgage crisis, with the collateralized, these traders that package things together and then they try to trade here and there. But that's kind of what spurred this, was the Bank of Japan kind of making doing an unpredictable thing.
Jim Brogan with Brogan Financial, our guest today. We're discussing the ups and downs of the stock market these past few days. And you mentioned the political season, Jim, moving forward until November 5th. How might the political back and forth impact the markets? Is it basically whoever's shouting the loudest from whichever side of the aisle they're on, or is there more to it?
That's a great way to say that. I do think it's some of that. I also think there's going to be more choppiness. The stock market is unpredictable and it's volatile. And the closer we get to the election, we're going to see some swings more than likely. And that just kind of comes with the territory. The market is going to speculate. I mentioned it's a forward-looking entity. It's looking at where will we be here in 8 or 9 months. So it's trying to interpret the election as who's going to win power and how will that affect the market 8 months or 9 months from now. And it's nothing but short-term speculation. So I just would kind of brace myself a little bit. We expect more volatility. In your financial planning, your investments that are at risk in the stock market should never be in the stock market thinking, what is it going to be worth in a month or 2 months? It should be, what's it going to be worth in 4 or 5 years?
Jim, I know
in the short term is completely unpredictable.
Sorry about that. I know you cover a lot of these types of topics and other things on the adult education classes that you have several times each year, and the next one's just a few weeks away on Tuesday, August 20th. Pellissippi State at Hardin Valley, the campus there. What can folks learn at this gathering?
It's specifically about how to structure retirement income, because people, instead of saving and accumulating money, are going to be spending it down, and it creates a different set of challenges. So we'll talk about how to structure retirement income, how much can you afford to structure, how do you blend in Social Security, your election there, and then also how can you minimize income taxes, because I think that's going to become more and more important going forward. So it's really all the different things that can impact somebody's ability to draw secure and increasing income in retirement.
Very good. Jim, thank you for your time. I know we'll probably be checking back in with you between now and Election Day and maybe beyond as we see a lot of the volatility that's happening in the markets, and we'll look forward to speaking with you again very soon.
Thank you, Bob. Look forward to helping any way I can.
All right, you got it. Jim Brogan with Brogan Financial. And, folks, to get more information on that adult education class that's coming up on Tuesday, August the 20th, Pellissippi State, the Hardin Valley campus, simply visit broganfinancial.com, BROGAN, broganfinancial.com.